Welcome to Industry Focus. I'm Nick Seipel. This week, we're discussing a sleepy student loan servicer that just could be a hidden gem. Joining me to break it down is Motley Fool Canada analyst Jim Gillies. Jim, thanks for joining me.
Thanks for having me on, Nick. You're going to say it just could be a hidden gem? No. This is a hidden gem.
Yeah, so this actually is an active recommendation here from Hidden Gems Canada. The company we're going to discuss today is Nelnet. I'm familiar with the company because it's my student loan servicer. Back when we weren't in permanent forbearance because of the pandemic, I used to give them $400 every month. Sometime here very soon, I imagine I will resume those payments. What got Nelnet on your radar as a business to invest in? What do they do?
Well, honestly, okay, so Nelnet is, I think it's in the running for probably the most boring business you're going to find. They don't do quarterly conference calls. Their quarterly reports are, this is a finance company, as you've mentioned, that mainly student finance, mainly student loan finance, although there's a bunch of other things under the hood. So the quarterly releases can be a little eye-watering, frankly. It is not a sexy business. What I love about this company, because I'm kind of a weird kind of guy, I've realized, what I love about this company is when I kind of started polling fools, hey, you ever heard of Nelnet? Hey, have you heard of Nelnet? To a person, when I polled them, they said, oh, Nelnet, yeah, they do my student loans. God, I hate them. And I'm like, okay, so I mean, that is just throwing candy at me, like, oh, I got to go look at this, because usually when people hate a company but are forced to keep on giving it money, that's kind of that's a powerful motivator for me as an investor.
Yeah, you talk about inverting, right? If you find a company that customers can't stand, but they keep coming back to every year, more often than not, you're finding a company that's monopolistic in some way. So the classic example is Comcast, right? Now, you won't hear very many people out there that have positive things to say about Comcast, but if you look at the stock in the company, it's done quite well over an extended period of time because you don't have another alternative. The government gives them a monopoly. And in this instance, Nelnet owns the contract for servicing government student loans,
right.
At least for now.
At least for now. Again, then that's So I'm already, my appetite was already whetted when I honestly don't remember. I saw a few things around Twitter or references to this ticker. I'm not sure what was the immediate catalyst to make me say, oh, you've got to look at this, because I look at a lot of blogs. I guess they're Substacks now. I go to a lot of Substacks. I go to a lot of blogs. I'm very active on Twitter, as you know. And so this came on my radar, and I started reading stuff, and then flipped over these guys, and got very intrigued. Because it is such there's so many really neat little factoids about this company, and that I think are important on, not on a specific day like today where the markets tend to be red and ugly, but just in general, if you were going to ask me to buy a company and put it away and not look at it for 10 years, I can't look at the price quote. I just have to buy and hold. Nelnet is among the 2 or 3 companies that I would consider for that position, to be honest with you, because it is out of Nebraska. Some other company on that list is out of Nebraska. Some, I don't know, Berkshire or something or other. But it's out of Lincoln, Nebraska, as opposed to Omaha. Not that matters anything. It is run by a guy. There were 2 main co-founders. One has sadly passed away at a fairly young age a couple years ago, but the remaining co-founder is still the largest shareholder, is chairman of the board, is also managing the estate of the other former co-founder. If you look at the board, the board level of the company, it's all Lincoln notables. You look at, like I said, they don't do investor conference calls. Their earnings come out, but you kind of got to go looking for it. They're not necessarily gonna, they're so off the radar. I think if you closed the stock market for 10 years and didn't let these guys trade, I think they'd be fine. They'd be like, whatever, that's cool. But it's this neat little, unlike a Berkshire, which is what, 500-600 billion market cap now. Nelnet's still sub 3 billion market cap. And it's got its fingers in a whole bunch of really interesting pies. It scares you upon first glance at it because you look at it and it's got, oh my goodness, this 3 billion, sub $3 billion company has 20 plus billion in debt. I mean, that's enough, if you're going to run a screen, or if you like to do screens for your favorite industries or your favorite companies, that falls out there, right? Most people are going to go, nope, we're out, we're on. So it's just this, there's so many neat little foibles that I find attractive from an investment that, again, it's not your big, sexy growth company. I'm sorry if that's what you're here for. I am not the guy to talk to. But it's just, I think as a bedrock position in a portfolio, you could do a lot worse.
Right. So you talked about, the founder still has a significant stake. If you look at S&P Capital IQ, it'll say he owns 20% of the stock outstanding. He has some other vehicles that own a larger percentage. But you talked about this isn't necessarily a high growth story. You're very much a cash flow based investor. And I think when you look at Nelnet, it is very much a cash flow capital allocation story. We're getting this bucket of cash coming in. We need to trust these managers to invest that cash. So you mentioned earlier that the large debt on the balance sheet and the student loan portfolio, that is one of the main generators of the cash that the company will deploy. So let's talk about that first, and then we'll maybe go into some of the other places they're putting cash to work. So where is the cash coming from on the student loan portfolio side of the business? Okay,
well, what I'm going to hit first is if you look at total insider ownership, Nick, it's actually about 44%. So it's almost 50% owned, as you mentioned, the CEO's got, former CEO, current chairman of the board, has got a big stake, but he also has other vehicles and what have you. So let's talk about the giant pile of money. Okay. So they have about a $20 billion ballpark. What's a billion here, billion there? A $20 billion portfolio of a type of student loan that is no longer made. Okay, that they no longer, these types of loans are no longer originated. I think under the Obama administration, they were phased out, but people have still got to pay their loans, right? Or there's still loans that are outstanding. And so these guys have about 20 billion, and a lot of that is financed. So that's what the loans are on the balance sheet, and then they're also financed with the debt structures on the balance sheet, which makes people get scared. Don't be scared. Because the really interesting thing about this $20 billion portfolio of what I'll call obsolete type of student loans is it's about 98% government-backed, government guaranteed. Okay, I guess I'm not that scared of if all students decide they're not going to pay their loans going forward, everybody defaults 100%, which of course never happens. Government's on the hook to pay it. And moreover, you have a cash flow forecast from this company. So this, now it's not all there. As I said, there's a financing vehicle back, but basically the long and short from this portfolio is they are going to pull out between now and, I don't know if I have the final date up on my screen here. Yes, I do. Now through probably about 2035, they are going to pull approximately $2.3 billion in cash just from this, what I'm going to call a slowly melting ice cube of a portfolio. Because this isn't their actual student loan business for now. This is just the cash that's coming in for this obsolete type of loans that are in runoff. So 2.3 billion in cash over the next, say, 15 to 20 years. But 1.5 billion of that cash is expected to come in the next 5 years. And do you remember the part where we said this is a sub $3 billion company? So we haven't talked about any of the business here. We haven't talked about any other ventures. I'm just talking about the cash flow that's going to come in from the slowly melting ice cube is basically half the value of the company today. Oh, and by the way, there's a real business. And there are multiple real business lines under. So that's kind of the first part that makes you go, well, this is interesting. And so that, I mean, I don't know if you want to, just comment on that for a minute or you want to move on, but that's kind of, I look at that and say, like, as a cash flow guy, what kind of a discount rate, like how much should you discount this 2.3 billion, even the 1.5 billion coming in the next 5 years. If it's a government guarantee, do you discount it at 2%, 3%? I mean, like I in my valuation process for Hidden Gems Canada, I think I did 3 cases where I did 3, 5, and 7%. I don't believe any of them, frankly. In a world where you have a government guarantee for almost the entirety of this cash flow stream, is there a reason I'm not using the five-year treasury bond? Like that 1.5 billion that's going to come in the next 5 years, maybe let's call it 1.3 billion in value to the company. Okay, so now we've got 1.5 billion of other value to explain for the present value of the company, which I think we can do real easy.
Right. Yeah. And maybe one last thing that we should talk about on the student loan. So I know a lot of people are listening and they have this question. Well, what happens if student debt gets retired, and how does that impact Nelnet? The interesting thing here is it actually makes the duration of those cash flows come nearer to present day.
Hey, if you want to cancel student debt, be my guest. That's a $20 billion check that lands in Nelnet's account tomorrow. Because like these, you just can't simply say, well, we cancel all student debt. Whoever owns it, you're out of luck. You're never going to get repaid. Like the government, because they're the guarantor here, government steps in and pays it. So if you want to cancel student debt, and I know that's a big subject down there, if you want to cancel student debt, go ahead. It actually will probably benefit Nelnet by a significant dollar amount, and certainly from a time perspective.
Right. So I think base case we have 1.5 billion in cash flow coming in the next 5 years that the company has to deploy, and then over the next 10 years, another 800 million or billion or so to roll off, which could depending on how things play out from a policy point of view, be accelerated earlier on. And we're taking this cash and then redeploying it into other parts of the business, trying to find a return. Where else is Nelnet deploying that cash? What are the other business lines where we see some growth? Because the student loan business is in runoff, as you mentioned.
Well, the owned portfolio is in runoff. The student loan business is not, and that's the thing. So it's probably best to think of Nelnet as I pull my notes up here and try to delay a little bit. So Nelnet's kind of it's a multi-headed beast. So the what we'll call Nelnet Financial Services, NFS, that's the portfolio in runoff. So we've covered that. There is Nelnet Communications, which is a wholly owned, or was a wholly owned, fiber to the home business. Because what's more alike than student loan servicing and student loan owning student loans and collections, and bringing cable to the home. But it's something that they invested in a number of years ago. They've rolled it out through Nebraska and Colorado, and they recently, as in I believe the transaction was completed last December. They announced it beforehand, but I think the completion was December. They sold a majority stake to a private equity group who has more experience in doing this. So I believe they've retained about 45% of that business. But the cool thing about that is we have a fairly we have a fairly fresh valuation on that piece of the business. So, and again, they're not running it anymore. They just got, so that their stake is probably worth $400 million, ballpark. But they've got that. They've got what's called Nelnet Business Services, which is kind of my favorite part of Nelnet. Nelnet Business Services is basically, it's an education technology services and payment processing division. So, you get revenue flows from, payment processing, so tuition payment plans, software as a service product. So all you SaaS heads who are feeling a little beaten up, have I got a company for you? But their clients are Nelnet Business Services, NBS, their clients are about 12,000, 11,000 private K-12 schools and just over 1,000, 1,200 higher education institutions. So think about if you're running a large for-profit, doesn't matter for profit, but an education institution. Once you bring in software you like, Nick, how eager are you to throw out that software system and bring in someone new?
Right. The switching cost becomes incredibly high, right? Because once the tuition stops coming in, the business stops running, and all of a sudden we can't pay our bills and
I
all
can
those sorts
save
of
you
things. So very high switching
5%,
cost.
right? If I can save you 5%, are you interested? Heck no. I mean, like you could almost, you could almost say, they're probably protected anything up to 50+% cost savings, if not more. So these are very, very sticky clients. And the interesting thing, and now 2020 is a weird year in general for a great many things. But, so we'll kind of look at pre-pandemic how this business is working. Because basically in 2020, year-over-year revenue and earnings were basically flat. But prior to the pandemic, NBS, again, the business services, the payments processor, tuition payments plan, blah, blah, blah. They were running, I believe revenue was running about a 15% annualized clip. Pre-tax operating income was running 18, 19% clip. And that's interesting to me because what kind of a multiple do you put on that? What kind of evaluation do you look at? And like I said, they kind of flatlined year over year. But if you want to slap, say, they did about 203 million in revenue last year. What kind of a multiple you want to slap on something like that? 4 times revenue, which is basically what the market is giving a public competitor of theirs called Blackbaud, which is ticker BLKB. Because Blackbaud's getting a 4x multiple on revenue. It's getting about a 20x multiple on operating earnings. Okay, well that's 800 million in value. Then, if you're slapping a 4x multiple on slap a 4x multiple on revenue, similar to their public competitor, that means NBS is worth 800 million bucks,
which is like a third of the market cap.
Well, it's remember I said, if the market cap is what, 2.8 billion today, right. We've already said, the 1.5 billion cash is worth, like, I said the communications division, which they now have a minority stake in, but still worth, we know what it was worth when the company that bought the majority stake now, what they paid, and we can scale that up, and that's assuming there's no growth. We're kind of out of market cap at this point, Nick, by the time we get rid of the big wad of cash flow coming through. We get rid of Nelnet Business Services if we assume it's as valued similar to its public competitor, and we get rid of the communication. We're kind of out of market cap, and I'm not done.
Right.
So.
Yes. So let's finish that off as well. So Nelnet launched a bank in 2020. If you look at so they don't do quarterly earnings calls, but they do a call once a year for the annual meeting. The chairman of the company said during that annual meeting back in 2020, they say in the next 3 to 5 years, it being a $1 billion bank, they're going to invest a significant amount of their capital coming in from the student loan portfolio into the bank. So what potential do you see there for that business?
Anything over 0 is great. I mean, I know they seeded, I think it was only December. I mean, look, I come from a country where we have like 5 supersized banks and 1 or 2 mid-size and then nothing, right? So I know you guys are a lot more familiar with having small and regional banks everywhere. And there's some really great values in that space too, which, I'm a big fan of. But this is still this is a startup. It's a startup bank. And while I have great, I think these guys have done a really great job over the years going into new spaces and growing in some pretty boring, pretty kind of, plain vanilla financial handling areas. They don't have a lot of experience in banking, obviously, but they have a great experience in loan origination, student loan origination, because that's the other division we haven't talked about. And servicing, and so they're kind of transferring some of that from the government. One of their other business divisions is I'm trying to think what they call it here. It's NDS, Nelnet Diversified Services. So that's their student loan origination and servicing arm. They get paid per account. They work for the federal government, for state agencies, banks, and other fintech companies. Okay, they're servicing about 500 billion, give or take, loans in that space. They're about to lose a good chunk of that business, or maybe they're going to lose a good chunk of that business. Maybe they won't, and that's because the government has essentially informed them that they lost 2 long-term loan servicing contracts, which are up pretty much this coming June, so next month. Except one of them is up this June. I think one is out another year. But one of them has they have the right for extensions, and I believe it's already been extended to December 2021. There's a possibility that it gets extended another 2 years, because what it sounds like is that the government really doesn't have a plan to go to. They just decided they want to, shake up the system a little bit, I guess, or what have you. So I'm not too sure where they're going to go with this, but we'll heavily discount this area, but say, so they're still getting loan servicing fees from NDS, and this is going to work well. In the meantime, they're generating new loans. They still service and manage loans for various federal and private education groups. They do consumer loans. And I think that's where this Nelnet bank is coming in. And I also, a little sidebar, I believe the day they got their bank charter, and they were advertising it for a while beforehand, saying we're applying for this, we're going to try and get this. But the day they got it, I believe it was the same day that Square got their bank charter. And I saw all kinds of headlines. Square is now a bank. I don't remember seeing a single headline about Nelnet. And I'm thinking I think Nelnet's probably going to do just as well as Square on the banking front. But I do know they did seed it with about $100 million of their own capital in December. And, I think they're using this as an arm to try to offset some of these, of the servicing for the big federal contract that'll probably go away, or some of it will go away. But even without that, they still had about 50 billion, 55 billion worth of loans for over 2 million customers on their books at the end of last year. And these are absent those big government contracts. They're gonna start adding via their bank, and I think it's just another. Looking for a proper metaphor and not struggling for one. It's another arrow in the quiver. It's another brick in the wall. The Pink Floyd myself. So yeah, I look at this and go, okay, and look, I know a lot of people, you might debate the morality of their student loan or of student lending in general. They might argue that education is too expensive. I'm not here to litigate that, because I can't. I think personal finance is, as they say, personal. I certainly benefited from going to school, so I don't mind the tuition I paid, but you're going to pay more today if you replicate my education. I think it's a complex subject, but for now, it costs what it costs. We know it's beneficial for the future. We know most people can't pay for it with cash flow out of pocket. And so there will continue to be student loans, I think, for the foreseeable future. It might morph and change, but it will still be there. And someone's got to administer and do the boring day-to-day administration and servicing work. And Nelnet has a pretty long, pretty strong history. And again, I'm still not done.
Yeah, so let's go to the last part. I think you're going to mention here, Jim.
You know where we're going. Well, and also too, they've done a lot of things, like they make acquisitions from time to time. The fiber to the home, they bought the much smaller version of that. They're buying loans all the time. They're adding to their own portfolio all the time. They bought back their own debt when they've had some debt. They don't have a lot. There's not a lot. The debt on their balance sheet, I should emphasize, is tied to the big portfolio of student loans. It's not corporate debt. Although from time to time they maybe tap their credit line. I don't think they've got anything on it right now. And they do, stock repurchases, and they do a small amount of dividends sometimes. I think they're doing 22 cents a quarter. Not going to make you rich, but 0.5, 0.6%, but it's better than nothing. And then they have what I'm going to call a venture capital arm, where they make venture capital style bets. And of course, when you make venture capital style bets, you should assume, and I think they've got 32 of them out right now, or that they've admitted to. A bunch of those are going to go to zero. A bunch of those will fail, but not all. And one of the ones that I don't think is going to fail, that I think is probably the most interest, is a company or a business called Huddle, where they own about just shy of 20%. And they've also participated in recent years adding to their stake. So as Huddle has grown and required more capital, they have stepped up and added capital along the way, additional financing. And it's not impossible to think that Huddle, we'll get into what Huddle is in a moment, because I know when I mentioned Huddle to you, when we first talked about this company, I'd never heard of Huddle. You immediately knew who Huddle was. So there's a generational difference there, I guess. But Huddle, they've attracted Huddle. I think Huddle could end up getting IPO'd or spun out at some point. And that'll be very interesting to me. And so Huddle does essentially, how do I put this way? If you are an amateur athlete, a student athlete, an athlete at a high school level, at a college level, junior hockey level, and you're in any of those programs, the schools the school programs will use Huddle to do tape, to run tape of, to dissect your play, to work with you. There's scheduling in there as well. And I know when I've talked to former student athletes, I know a couple of guys who've played football at US College, they'd never heard of Nelnet. As soon as I mentioned Huddle, they went, "Oh, well, yeah, no, we used Huddle exclusively. It was how our school did analysis of our sports performance, period." So, if you're, I know you've got some thoughts about, the financial implications of Huddle and what that could be. But Huddle claims they've got more than 6 million coaches and athletes in 140 countries, 160,000 teams across 35 sports. This is fairly big. Nelnet owns 20% of Huddle. And the CEO and co-founder of Huddle is on Nelnet's board. And like I said, they brought in some other deep pockets like Bain Capital. So it's, there could be a unicorn hiding in plain sight here that, because Nelnet is so off the radar, people don't realize it.
Yeah, I think the really interesting thing with Huddle is a couple things. So first off, you mentioned earlier that they have the existing business where they do the tuition for some of these private schools, which obviously gives them a natural kind of sales pitch to attach Huddle to some of these kind of private school programs that tend to have some pretty strong athletic programs. So that's interesting, and obviously gets the athletes in the ecosystem. And what you can also do is you can take that and create your own kind of highlight videos, promote yourself, all that sort of thing. If you ever watch, I follow college football recruiting every year, you'll see these highlight videos of different athletes, kind of all their plays through the year. And Huddle is one of the providers of that. Why I think that's particularly interesting now, obviously folks have been more and more involved on social media and all these sorts of things, being able to package their highlights and promote themselves. But the thing that's really interesting is the opportunity for amateur athletes to monetize their name, image, and likeness is opening up in really a significant way this year. So you saw in 2019, California passed a law allowing name, image, and likeness for, I think this is going to go into effect in 2023, the California law, and basically allows, if you're a college athlete, you can sell autographs, or you could maybe sponsor the local car dealership, or what have you, which runs counter to the traditional amateurism rules you see in the NCAA. And this has been a really huge groundswell. So 15 states have passed name, image, and likeness rules to date. 6 of them are going into effect in July 2021. One of those is in Alabama. You already see the University of Alabama promoting how we can monetize your name, image, and likeness as a recruiting tactic. And we have 9 more states that are going to go into effect between now and 2025. There was a statement, I believe it was this morning, from Mark Emmert, who's the head of NCAA, saying they would like to have a name, image, and likeness rule in place by July 1st. So they have a national standard. And so what you're seeing is this obviously is a great tailwind for Huddle, because this is the way you as an amateur athlete can put together your highlights and start marketing yourself to both programs that are going to be able to help you monetize your likeness, and also just in general. And so you can see this tailwind, right? This is a software that is designed to let athletes market themselves, and we have the market for athletes being able to do that growing in a really significant way, I think, starting this year. So you've already seen a strong growth for the business over the past several years, and now we're removing what would have been a hurdle to growth from a regulatory point of view. So I would agree with you that I think there's a lot of tailwinds behind Huddle, and you could see that company in just a few years, maybe being as big as Nelnet is.
Yeah, well, and that's the thing is that, remember that part where I said we pretty much explained the entire market cap just by the big river of cash coming down the pipe, the cable business, and the business services. I mean, so basically, you're getting Huddle for free. I like free, but I'm kind of cheap, so.
Right. So that was where we're going to kind of end it off here, Jim. So when you look at the valuation today, what do you make of it? And then also, how do you think the company looks different 5 years from now as this student loan book that we talked about moves on?
Okay. Well, I will make a bold prediction. I don't know how bold it is, but we'll try. My bold prediction is that they won't, in fact, lose those servicing contracts that the present administration, I think, favors stability because they've got a lot of other irons in the fire, pandemic, infrastructure. So I think they're actually going to very quietly probably retain a lot of their servicing business. Could be wrong, but I think that's kind of the which way I think the winds are blowing. But again, I don't really care if that's not because I don't really need it. I think that they are going to use that river of cash to move more heavily into the present type of student loans, whether they're facilitating under the bank or using servicing with other financial partners, which they've done. So I think a lot of the melting ice cube part, those obsolete style loans will roll off, but a good portion of that cash flow is going to roll into new student loans because it is a business that they know and are quite good at. I think they will continue to do a lot of, I think they'll probably end up selling the remainder of the communications business. Like I said, I've got it worth $380-400 million. That's based on what the price was that the minority guys came in and took, or the majority guys took that stake last year. It wouldn't shock me if in less than 5 years we see the rest of that value sold at $500 to $600 million, frankly. And I think I think I can see there's more emphasis on the bank, number one, and then also on some of these venture bets. They're also doing some stuff in solar. And I mean, they've got all kinds of little irons in the fire, right? And the other part is I look at this and, okay, here is a business that has, and also if anyone's interested in Nelnet, I would highly encourage you to go to their investor relations site and seek out their annual letters to shareholders. Because much like that company down the road in Omaha, the chairman likes to write an annual letter. It's a very interesting read. I'll put it that way. These are guys who are not concerned about the next quarter. They're not concerned about hitting Wall Street estimates. They don't care. This is a company that is absolutely thinking for the long term and for the health and wealth of their shareholders. And so I kind of look at that and go, I wonder what other little venture things they're going to roll this capital into. And I think Huddle will be public by that point. But it's I know 2021, I'm 10 years in the past, fools. 2021 has been a difficult time for a lot of investors after 2020 turned out to be an exceptionally good year. And I think, I personally think that I think you want to balance your growth companies and you're really the stuff that, makes you happy in bull markets, but maybe makes you unhappy in bear markets. I think you want to mix that with some good bedrock companies, and mentioned that little company down the road in Omaha. That's a bedrock style company. I kind of look at Nelnet and I think this is a bedrock style company that you can buy, put away, forget you own it. You're going to get a nice dividend, probably a growing dividend. Again, that's not why we're owning it, but you're going to get it anyway. And I wouldn't be shocked, frankly, Nick, to see a share repurchase plan also ramp up. They've always got one going. They've always returned a little bit of money via share repurchases. But if they truly do lose the servicing end of the business and they don't see a lot of opportunities for some of that cash coming in, it wouldn't shock me to see them buy back significant amounts of stock. Not saying it's going to happen, but it wouldn't shock me. And the company is trading at 1.1 times book value today, which is nothing. So.
Right. And for a company and the, people are like, well, there's limitations to book value. For a company in the financial services realm, it's a very, very, very legitimate valuation metric to use for the company. And yeah, to Jim's point, a lot of times we've heard of the past year, folks talking about how much upside companies have. And I think there is some upside to Nelnet, but I think that the really thing that pops out for me is how little downside there appears to be when you start doing the math of the cash coming in and all the other parts of the business. May not have the most growth potential on the face of the planet, but it's hard to see a scenario where you lose significant capital today. Would you agree with that?
100%.
Yep. All right. Well, Jim, thank you so much for joining me. Folks want to keep track with Nelnet. We'll have you on sometime in the future. Until then, thanks as always.
Thank you.
As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against the stocks discussed. So don't buy or sell anything based solely on what you hear. Thanks to Tim Sparks for mixing the show. For Jim Gillies, I'm Nick Seipel. Thanks for listening, and Fool on.